This is Judith Paquette, Bank Reconciliation Part 3. So we're going to take the bank statement with its balance of $6,488.95 and we're going to compare it to the book balance of $5,322.69 and we're going to create the bank reconciliation. The bank reconciliation starts with the bank statement, that ending balance, in this case on November 30th, 2013. To that number, we're going to add deposits in transit, we're going to subtract outstanding checks, and we're going to get an adjusted balance per the bank. Then we're going to go over and we're going to take the balance per books, and that's going to come off the cash T account. We're going to look at the bank statement and add any deposits recorded by the bank but not yet by the company and any corrections. We're going to subtract any disbursements recorded by the bank and listed on the bank statement but not yet by the company. And we're going to get the adjusted balance per books. If these numbers are equal, then we know we've reconciled the bank. Now, here's a sample bank statement that I am going to walk you through, but let's go to the bottom. See how these two numbers are equal. 5,572.29 on both sides. Now, these items under the books, they are items that are not recorded in the T account. They are not recorded in any journal entry. So after this is all over, we're going to have to create journal entries for all the adjustments that are listed on the book side of the bank statement. All right, deposits in transit. How do we get this information? We can get it a lot of ways, but the company keeps records of what they've added to the books, and they compare that record to what is listed on the bank statement. And they did that, and they said 3 checks that we got from customers are not appearing on the bank statement, and they add up to $225. So we're going to add that to the bank balance. Outstanding checks. Now you have to literally look at the bank statement and match all the checks that cleared the bank to the company's records. Now you can see there's a gap between 166 and 169. So we know that those two checks, 167 and 168, are still outstanding because they were issued within the month of November. Now the checks that are shown on the bank statement stop with 171, and so the company's going to look at their records and they're going to say, hey, we issued 172 and 173 on November 30th, and they are still outstanding. So those are your 4 outstanding checks. Add them up, 1,141.66. We're going to deduct those from the bank statement. Now, if you had outstanding checks from the previous month, from October, you would need to make sure that they had cleared in these early checks that are listed. If they did not clear, they would be added to the current month's outstanding checks. All right, let's go over to the book side. Now we look at the deposits and we say, is there anything in the deposits that we do not have on the book side? So look here, we have a $300 deposit, and we know that that was a note receivable that was paid in full for $300. We're going to add that $300 to the book balance. Under the checks, there's an item for $5, and we were told that that was a $5 collection fee. Banks charge a lot of fees. We're going to deduct that from the book balance. Now in my earlier example, I said there could also be interest on a note receivable. In this case, there was no interest earned. It was just a collection fee that we owe the bank. So there's 2 other charges that are listed under the check column in the bank the bank statement. This $35.40 is a returned transaction, also called an NSF check, not sufficient funds. The bank charged a $10 monthly service charge fee. Now banks often charge service charges for the privilege of doing banking there. Both of these will be deducted from the book balance. So here you have it. Start with the bank. 6488.95 came straight off the bank statement. A deposit in transit was added, 225. The 4 outstanding checks were subtracted, and we have an adjusted bank balance of 5572.29. On the book side, we start with the T account cash. We add the collection of the note. We subtract the collection fee. We subtract the NSF check, and we subtract the service charge, and we get an adjusted balance per the books of 557229. These are in balance. Now we have a final step. We have to make journal entries for everything that's on the book side, and we're going to do that in the next video. This ends part 3, the bank reconciliation.